The S&P 500 just gave a perfect gap fill reversal after failing to break out of the bull flag just a few days prior. And when you start looking around at several of the AI leaders, things are getting a little ugly. AMD, yikes. ARM, yikes. STX's failed breakout, yikes, and the list kind of goes on. Besant tried his best to put a bid under the bond market this morning by doubling down on long-end purchases over the next few auctions. Bonds go up and rates come down, right? Which they did, but the market does seem to be sniffing out the BS because lots of high beta names, sensitive to rates, still got absolutely crushed today. The real place the AI trade seems to be pointed next is biotech. Apparently cancer is cured, with Moderna gapping up over 100% on their phase 3 trial news. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 6 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale, trying to figure out where exactly are we in the trend count. Well, we're pulling back from the all-time high, which is the highest high in the trend count, and therefore we can afford to set a daily higher low. Remember that this is a soft higher low, the hourly trend never flipped to down. We're certainly in an hourly downtrend right now, so we can afford to set a firm daily higher low. Where does that higher low want to be? Really, the answer is anywhere over this prior low, the Leo liquidation low, but let's be a little bit more realistic about this, right? We could look below and fail the flag range low, and that would also make sense. This is 767.50. Little sweep of the lows, get everybody all bearish. Oh, look, it's a head and shoulders, and you got your left, your head, and here's your lower high, right shoulder, and oh, it's the end of the world and we're going lower. If you're just over 767.50s, how bearish can you really be inside of this flag range? We'll deal with distribution when and if there's price acceptance under 767, which, by the way, still leads you to a daily higher low. Something that looks like this, retesting the previous left side peak, the prior all-time high. It's pretty much picture perfect, and as we know, things are not picture perfect in this market. If they were, this bull flag would have said, hey, look at me, and it would have never looked back as we were drifting off towards 800. So that's not the situation. It might be a little bit gnarlier than that at the retest of the previous all-time high, in which case, if we overshoot and look something along these lines, you're still going to set a daily higher low here over 754.75. I mean, let's just use our eyes. That is certainly a higher low relative to the Leo liquidation lows. It's also going to be respectful of prior structure, even though it overshoots the more obvious structure in the gap close. Those are some potential higher lows on the daily. Now, how do we actively achieve that on the hourly chart? Let's take a look. As we take a look at the hourly timescale here, there's a couple things I want to point out. Once again, if the market was going to be picture perfect, we probably needed to do something that looked like this on Monday. We're consolidating here on Tuesday and up and out on Wednesday. Didn't happen, right? So you've got a little bit of the situation where late longs are being punished. The gap down is certainly painful. But what I would really call out here is that the sellers did not accelerate on that gap down from Tuesday. The market gapped down and just kind of went absolutely nowhere fast. And where did the market happen to settle? Right at the previous low of the bear flag. Now, on today's session, we get a perfect gap fill reversal against Monday's low. So what does that tell us about the state of the buyers as well? We don't really have strong buyers. So in the analysis sequence, strong sellers no, but strong buyers also no. If we had strong buyers, right, it probably should have looked something like this. Look into the previous day's range, get over the opening print, consolidate here over the 8 EMA, and start to push into Monday's range. That's a stronger close for bulls, but where did we actively close? Down here. So I'm not going to look at this chart and say, oh my God, everything looks so bullish, it's going to the moon. It certainly seems like we want to test at least underneath this low of 767.50. The key question for the end of the week just remains, okay, do we get this? And then we're here, in which case, okay, there's your daily higher low. You make this a little bit more aggressive underneath 767.50, look below and fail, higher low right here where the arrow is pointing to. That's where you're really scouting longs, tight risk reward, back up for something that looks like that would be the way to exploit this sort of range here. If the market's going to make it a little bit more difficult than that, we would extend beyond the lower bound of the weekly expected move for something that looks like this. Once again, do we really want to be new money shorts down here? I personally don't think so. I think being short in the hold down here after the gap down and failure to follow through, little bit of a foolish mistake. I would say one of my top sort of situations to monitor for is the look below and fail, just like that. But if the market does provide some sort of lower high underneath, if you want to take tight risk and you think you can get the reward down here towards the previous all-time high retest, be my guest. You're going to continue to need some weakness in the AI-related names and a deterioration likely in semiconductors if that trade's going to play out, which, never say never. When and if we get down here, as we've mentioned on the daily chart, right? A little overshoot, close the gap. That's your picture perfect. Serve it up on a silver platter. A little bit of overshoot beyond that. We're probably talking about next week at this point, but should the market do this and then kind of flub, then close the thing all the way down here towards the 754s, 75s, this is probably not going to happen into Friday. It's probably late this week, early next week, where we're talking about this situation, still seeking a daily higher low at that point, because the daily trend structure would just allow for it. So let's identify some threats to thinking, okay, everything's fine, the market's going to set the higher low and we're going to continue. I mean, it's very possible that a breakdown here that comes and closes the gap and does something that looks like this and then rejects this as overhead supply, we're not foolish about it. This would certainly be a compelling argument for the bears to say, hey, would you look at that? This is a daily lower high now, and the trend has the opportunity to flip to down on a break of the equal low. We're not there yet. I don't want to get overly bearish just for the sake of talking about that potential outcome, but if you're someone who's like, geez, I need to see it all in advance, I need to know the different chess moves, that's what the bears would want to see, right? A breakdown of the overhead supply and a lower high underneath, rejections of 767.50. I would be a little bit more optimistic and at least try for this first, seeking that higher low, right? Seek the higher low, trade it long against this. We can reevaluate here. We can trim longs into this. We can reevaluate and say, do we want to sell it all? If we get a rejection here and flip short, or was it a good thing we got long and we get something that looks like that, right? Let's play the overly optimistic hand as well. And let's just say okay, what if this market opens in range and starts to consolidate here? Does that not set us up for a Friday where everybody got really bearish in this segment and then suddenly we're here? I mean, I don't know about getting a huge rally with people wanting to hold risk over the weekend, but that certainly puts us back inside the midpoint of the expected move for the week. So any acceptance, I would say, into the end of the week, let me just reel this thing back in and land the plane here. Any acceptance over 771.25, bullish, probably looking for this in the near term. If we look below and fail, the key level, let me draw that a little deeper. Look below and fail with a higher low back over 767.50, reclaim of the lower bound of the weekly expected move, bullish there as well. We have an excess low. The auction ends properly. Chop it out a little bit. And then if we can reclaim the moving averages, the 5-day will start barreling down. The 8 EMA will do something like this. If we can reclaim all that stack and go up and out, you're just looking back to the all-time high, right? And the QQQ will play a very key role in this. We'll talk about the Qs in just a second, but let's take a couple of measurements I do want to share first, and then we will take a closer look at some other markets. Let's jump in from the low of the Leo situation up to the highs. Just a reminder, your Fib 38.2 is literally right there, right? It's at the previous all-time high retest. Pretty awesome spot. Let's take it from the breakout day low up to this high. And just pointing out here that the Fib 38.2 is confluence with the bottom end of the consolidation range. So once again, a look below and fail of that preserves bull flag consolidation. From this perspective, the 61.8 is also right in the neighborhood of the gap fill reversal, previous all-time high retest. We should also move into our anchored VWAPs and just double check over here. Oh, would you look at that? A look below and fail of 767.50 is an anchored VWAP retest of this breakout day from back over here. It's really the U-turn day, and the dead low day is over here as well, which is going to be near the rising 20-day as well as that previous all-time high. One of the key references that you could use if you're looking to be more of an optimist, let's just say that we're open in range and we're consolidating, you could just look at the all-time high anchored VWAP and say, okay, do we get a break of the all-time high anchored VWAP? That possibly moves a little bit lower like this the next few sessions. If we're consolidating and Brigade bolting above it, that gives you your advanced heads up that, hey, people who are technically long from after the all-time high or at the all-time high, the average participant anchored VWAP, right? Volume weighted average price, those people are back above water. They have no reason to really freak out. So I don't think we should be overly bearish on the daily configuration here. I think there's reason to believe that we need to test and truly shake out the lows of the flag, like actively break down underneath this 767.50 level based on the gap fill reversal, the lack of new money buyers, based on the lack of new sellers though. I also don't think that this is Armageddon. I'm not seeing enough evidence to totally derail the bull thesis here and say, okay, pack it up, let's go home. This thing's doomed, right? Let's jump on over to the market internals. If you're not familiar with market internals, check out the video tutorial in the top right-hand corner. What do we see here? I mean, really, for all intents and purposes, on the gap down from Tuesday, you mean to tell me that the volume flows at the exchange level were not even as bad as Monday? Really? On a gap down? I mean, just stronger sellers, where are you, right? Just nowhere to be seen. On today's session, if we're just kind of sideways in there, closing a little bit weak, volume flows are technically up. The advanced decline line's technically up. Again, look at your Tuesday advanced decline line, not even close to trend lower zone. The index score, for crying out loud, this thing measures from the opening print, right? No follow through on the intraday there in the places that matter for the S&P. You could see the cumulative build absolutely bearish. We got to give the bears some flowers there. Okay, nice job, but that's batting for like what, 1 out of 5 little inflection points we've looked at here. It's not as bearish as you might think it is. So, you know, I can't get myself to be totally bared up when we're this close to all-time highs with the possibility of a daily higher low to still preserve the trend and keep things intact. Is it difficult in high beta land? Absolutely. Before we jump on over to the Qs, let's just finish up the S&P with a look at the market profile. What I would just point out here is you have a double distribution from that Monday session. Notice how the break of these lows clearly gave you that H period delineation. It's going to be fairly obvious into the end of the week. Are we accepting in what I consider distribution number 1, or are we remaining in distribution number 2? If the market rejects that, right, which is basically the equivalent, let's go back over here. That's the equivalent of this 774.85 spot. If we're underneath it, we're still just kind of chopping around and figuring it out. Yes, I can see the opportunity for the head and shoulders. I get it. There it is. Oh my goodness, it's the end of the world and we're going to zero. You know, but it's not really the end of the world if we're not actively breaking down and sustaining price underneath this 767.50. That level's hiding there underneath the lower bound of the weekly expected move. Any other nuances to pick up on from market profile perspective? Check out the video tutorial, by the way, in the top right-hand corner if you're not familiar with this type of chart. Just the fact that we did not get much price acceptance in the gap, right? If this is the gap range from over here, you didn't really get a ton. Well, I mean, I guess, let me take that back. Little real-time analysis update there. Point of control technically closed in the gap, but check out that poor low, little lack of material excess, the low of day today. Wouldn't be unreasonable to need some excess down there, need some excess generally on that flag range, which supports the thesis of, there you go, look below and fail, come back up into range, repair the structure, and then we move from there. So that's kind of where my head's at. I don't know that I would be trying to slam shorts off the top end of the range for that right shoulder if it does set up that way. I will wait for the confident trend change, something that looks like this, making a new lower low, if that's the way it plays out underneath 767.50, if we need bearish outcomes here. But let's jump on over to this QQQ because there's an additional thing I want to point out. I mean, what's the first thing you notice when I drift on over to the Qs? I mean, how about the darn near perfect wick right off the daily 50 SMA? How about the fact that we're not testing yet the follow-through day gap up low? Again, I'm not going to sit here and say that this chart is picture perfect and pretty. It's not. A picture perfect and pretty textbook chart would be like this and we'd be at all-time highs, right? We're back inside the range. We're back inside a little bit of the slop, but is it like, let's frame it this way. If you're a bear and you're seeing this price action, unless you're literally short the highs, if you're trying to get traction on shorts in here, you know, it's like, it's kind of working. You feel a little bit woozy about it because you're like, yeah, you know, I see the bounce off the 50 SMA. Do you really have all that much confidence to be holding shorts in here? I mean, and never mind the post market, right? We're 719s or whatever. We're kind of coming back into the highs of today's trading range. It just doesn't really seem like one of these situations where shorts are really laying into it on the gap down and pushing prices lower. Let's say, you know, daily trend count, sure. Lows, higher low happening here with the follow-through day. We really want to monitor that. Is this still a higher low over the 50? Yes. Is there any hourly downtrend in here? No. Is this an hourly downtrend? Yes. So any sort of follow-through off of the 50 SMA, when I say follow-through, not follow-through day, but any sort of movement over the 2-day equal highs, you know, we're at least talking about a gap close there into the top end of the junk drawer again, which is at 727s. Let's go on down to the hourly chart. Let's get a little bit more granular here. And we can start to see this once again. If you're a seller, you see this move on Tuesday, you're like, oh, here we go. I'm looking at my chops. Here we go. It's got to be short. It's lower. What happens today? You open higher. It breaks a prior day low. So you're like, okay, geez, thank God I'm saved here. I'm made whole. If I was anywhere short in here, this open didn't, open higher and then do this. Besant wasn't able to juice the market that hard. And then the next thing you know, you're breaking a previous day's low, snapping right back into range and going nowhere into the close, right? Trump's commentary doesn't trigger anything from a tariff perspective on Canada. There's nothing about the crypto stuff that really rattles the market in here. There's no offhand comment about the Strait of Hormuz or whatever. There's nothing that gets you followed through to the downside during any of that commentary. So if you're a seller, you're probably feeling like you're in a little bit of hot water here. Any opens, once again, we're 719s in the after hours here. That's going to push us right around in this neighborhood. Now you have 2 days back to back where sellers are potentially short from after the gap down, thinking that's it, right? It's game over. Opening above that, any pullbacks that kind of hold higher lows against today's low, that's just the key inflection point now. those shorts are feeling the pressure over the 2-day high. I think it's long into the gap close, right? That would be a reclaim of the daily 8 EMA, which is this blue cyan line there. The 5 SMA is going to slowly start coming in like that. And I shouldn't even say slowly. That's a fast moving average, right? Any opens that sustain higher lows relative to today's Wednesday bar. Heck, it could even just be an inside bar on Thursday like this, and then up on Friday like that, to close the gap, and then we'll reevaluate up there. It just doesn't... It doesn't strike me that aggressive sellers are actively making progress in this market, given the gap down nature of what happened on the Tuesday session. So that's what I'm seeing here on the Qs, just like what we're kind of seeing over on the S&P. Let's be congruent with a couple of fib pulls from the low here up to the highs, well above the fib 38.2, which, well, I shouldn't say well above, but we are above, which is the follow through day low. It's the top of the gap, 707, as we know. That's a decent level to be paying attention to, as well as this low from here up to this high, fib 38.2, right in the neighborhood of that daily 50 SMA, which is why I think, today's low is just going to be the line in the sand. That's a fair statement to make. I don't think that's a stretch of the imagination. We got a little bit of fib confluence there, but it's really the daily 50. It's the fact that we opened, washed out, and then couldn't go lower that makes this level key. Sellers will likely feel emboldened underneath today's low, and if we are above today's low, they will feel the pressure, and I do believe we have some semblance of a gap close available to the upside should we start breaking up and over 722.20. So that's what we got going on over here. Once again, a gap close. How many times have I said once again today on the Qs specifically? A gap close, is there potential there for like a head and shoulders to start emerging? We could start thinking about that when and if it happens, but I would say we're starting to get some AI leadership to emerge in some select software names. And if those software names can really pull for higher, and if just the SMH can at least go sideways, I don't know how bearish I would be here over in the QQQ NASDAQ. Let's quickly hit this with the anchored VWAPs just to double check in on these. Kind of tangled up in the stack. What I do like about this is that the Thursday of last week, which is the equivalent to the all-time high break on the S&P, that break to a new higher high, which was here on the NASDAQ, right? This is going to be confluence like early on Thursday, if not midday Thursday, early Friday, right at the level to get into that gap, right? Something like that is a really important reclaim of that anchored VWAP, which gives a little bit more confidence to the buyers. The true all-time high anchored VWAP, from the Q's perspective, at least back here, the red arrow, is acting supportive. It is acting supportive alongside that daily 50 SMA. So once again, big, I shouldn't say big, but just an easy line in the sand to use is today's low. If we are above today's low, then I think you want to sort of think of this as the higher low in the count and try to get bullish from here, seeking movement in the upward direction, right? Just like, what we were saying in the pre-market today, nothing like a little bit of price action to change sentiment, right? Based on the Besant move in the upward direction there when things were rallying, it was like, okay, here we go, it's up, right? And then you kind of get smacked off the open there. Well, let's not get too down in the dumps. Let's not get too bearish as we're coming into a key reference point for a higher low, right? Anyhow, let's quit the rambling and keep on moving on. If you appreciate the rambles, let me know in the comments section. But let's jump into these NASDAQ market internals. Volume outflow is a little bit more substantial on that Tuesday gap down for the NAS. Makes sense. That's where a lot of the damage was dealt. Tuesday's advanced decline line, not too bad, not in trend lower zone. And the cumulative build, yeah, it's there. Actually, it's not quite there. It's 6K as the key read. That could be plus or minus, depending on direction. This is 5,300. Not bad for the bears. We'll give them a little bit of credit on that. Even in the after hours, again, just take a look at this futures move pushing up and out. And I do believe, if I'm not mistaken, I don't want to jump around too much, but let's go DRAM. I believe is getting bid. Yeah, DRAM is getting bid through here. A little bit sour, having let go of some MU around 936, whatever. I got it in here. A little bit of a poor buy on my spot, but anyway. MU certainly up and out, 953s. All right, let's see where we go from there. Anyways, don't want to harp on that. Let's jump from the market internals of the NASDAQ over to the market profile of the NASDAQ. Let's take a peek over here. Your value does not shift lower with price action today. It is pretty much overlapping to, I guess a little overlapping to down with the prior day. If the market wants to go up and out, right, like I was just saying on the NASDAQ, any opens higher that pull back and support, I would just use the point of control right here, call it 29,550s on the NQ futures. If we're above that, I think you're up and out to start closing a little bit more of that gap, just based on the premise that any late shorts, those guys are, as the kids would say, cooked, right? Let's go back on over to the platform here. Let's give this a reset and quickly tour our IWM, the least favorite index of folks, at least around here. I don't know why. Small caps, sniffing out a little bit of the BS from Besant this morning. What do you mean you're going to run them right up until November in the elections, right? That's when you're going to cut it off. That's kind of an odd cutoff date. Anyhow, Market sniffing out a little bit of like, okay, funny business here. Rate sensitive small caps kind of open higher and close weak, right? That's not really what you should do here. If rates are truly going to come down and stick, let's just bring them up. TNX, CGI on Thinkorswim. There you go. So a nice pullback over here underneath that 4.7, but you're still well off of, if we just go to the yearly chart, right? We're well off of this 4.5. Remember when 4.5 was the pain point? I guess Besant kind of has finally said uncle, and 4.7 is unsustainable. So anyhow, going back on over to this IWM, if we just click on this one, a little bit of a pull in here, 302.15s in the after hours, kind of right around in this neighborhood right here. Not the end of the world. From a trend count perspective, highest high, hourly pullback, sure. Consolidate up and out. Yeah, bullish there. If you're just chopping around like this, a little something like that, not the end of the world. Holding on to about 300, the round figure, would be kind of a short-term line in the sand for this IWM. Hourly chart, anything new to glean over here? Not really, just stuck inside of balance. Just like over here, we didn't want to overanalyze the range. Probably don't want to overanalyze the range through here. Let it chop, let it slop. Up and over 302.75 is bullish. Look below and fails down here. Keep us in play. And underneath, a little bit of yikes coming into the daily 50 would be a base case assumption for downside. Let's quickly hit the small cap side of the exchange and see what's going on with the internals there. Better volume inflows, but you did have strong volume outflows on the Tuesday session. AD line fades all day, and the cumulative builds are still bearish over here on the smalls. Once again, a little bit of sniffing of that BS detector is kind of what I think is going on over here, based on, markets don't want intervention artificially to do that. They can, markets don't, they will not reward corruption. You could argue, you could argue that kind of both ways, but historically markets kind of like the correct thing to have been done. That way we can keep trust in what's going on in the institutions, right? Again, I don't want to hear in the comments section, oh, this is corrupt, this, that, the other thing. I'm just telling you, that's the way markets respond, right? So anyway, moving forward from IWM into the, I guess we should look at, let's just do it. Let's take a look at the Russell side of the market profile. Let's do this. Let's do this. Let's just make sure we can see a little bit of that. Value closes low in the session. Poor low at the low of day. Good excess at the highs. I think we could easily sweep the low. Don't overanalyze the range, but sweep the low, repair the poor low, come back in and over the 2-day highs. Bullish. That's a potential outcome here for the Russell. Not a ton to glean, I would say, from a market profile perspective. Small progress made in the upward direction versus the downward progress made in something over here like the NQ. Point of control is slightly lower. ES futures, point of control slightly higher. Value overlapping to up, right? Let's move on from market profile over to our sectors, because this is really where the fun begins. Let's take a peek at, we'll just leave this up over here as we talk about who is leading, who is losing, where was the weight. XLV, talk about a absolute rip in the upward direction from your healthcare names, but specifically, right, it's the biotechs. It's not all healthcare, but you go on over to an XBI and you're like, oh my goodness, up, up, and away. Thank the lucky stars. I shouldn't even say luck. It was, I'll pat myself on the back a little bit from a skill perspective. Buying the lows there of LabU on Friday, that's feeling pretty good right about now. LabU, by the way, for anyone who doesn't know, is the 3x levered XBI. But, long from here up there, it's a pretty compelling close. Moderna, of course, is the poster child of episodic pivots. Talk about, if there was ever one stock to apply the term to, episodic pivot, you got the cure for cancer. That is the one. So huge move higher. We are now 16 times the ATR from the 50 SMA. I don't even know if we should use 16 times now, but the thing's up 50% from the opening print, from a previous day's close. The damn thing's up 176%. Just round up, call it 177%. So talk about a true episodic pivot over here on mRNA. Be mindful of a little bit of an offering. Something that could be in the cards. I've heard that swirled around just a little bit. I'm not going to pretend like I'm going to be Johnny on the spot and be able to capture any little bit of downside there or whatever. I wouldn't try to get fancy with this thing, cute with this thing. If they truly are going to solve cancer, it belongs where it is. Like, thank goodness, right? We've got a cure for this damn thing now. So they deserve it every bit and more. This mRNA, you could say whatever you want about the pokey pokes from back in 2020 or whatever year that was. But if they could point AI at a good cause, this is what it's all about. So mRNA, really nice move. Congrats to anybody who's in it. I am not. Just have the LabU proxy. I know some people have Eli Lilly, which is also acting phenomenally out of this base, just on the topic of healthcare, right? Leading the groups here. Merrick, of course, was a partner with, not Eli Lilly, but Merrick was a partner of Moderna on the trials. So that's looking pretty darn good in the upward direction. Teva, how are these guys doing? Teva trying to get up and out of this base. How about something like a Pfizer, PFE? Trying to get up and out of this. I mean, everywhere you look in biotechs, they're a little tough because, biotechs could easily come out and have an offering the very next day, or you could get a phase 3 trial or a callback on the trial or whatever. A lot of volatility on these biotech names, but just if you stick with the basket, and you could even say ARCG, the genomics names looking absolutely stellar. If you stick with one of these baskets, I'm not going to say it won't lead you astray. There's always risk in trading anything, but I'd rather kind of just be involved at the base level here. Although, I mean, who the heck is going to complain? If you're in Moderna, up 170 whatever percent, power to you and well done, and we'll kind of see how it goes from there. Anyway, that's the little spiel and the little rant on even another one, sorry, just came to mind. How about this Tempus AI on volume today? It's probably worth, I don't know if is it good enough over here, the fundamentals tab. If we go XBI, is it going to break it down? It will. Look at that. Twist Bioscience, Ripper. I don't want to get too deep into every little biotech here. That's not my job to be a biotech trader. But certainly in terms of the way that the basket is acting, this is a big opportunity for AI to address. We know Eli Lilly is sitting on a mountain of data with their failed trials. Those failed trials will become useful now because of the way AI can sift through them. And, they're rightfully being rewarded for that. I don't want to talk too much about the biotech stuff, but my goodness, if you're ignoring this theme, you are just sleeping on a literal sleeping giant, which has the opportunity to change the world. Energy, speak of the devil, another absolutely monster theme here. Now, before we go any further, are these the right sectors to be leading the market to a new all-time high? XLV is not when we think about things like UNH, like United Healthcare, for example, but is UNH really what's driving the XLV? No, right? It's not. It's the drug manufacturers, diagnostic companies, those types of things. It's not the insurers of the world where it's like, okay, regardless of recession, we got to collect our checks, right? So it's actually, kind of, I don't want to say poetic. Maybe it is poetic to see UNH down as mRNA is straight up. Anyway, energy, a little inflationary over here, and this thing has just been an absolute ripper out of this flag. We'll see what happens with the Strait of Hormuz news, and if you want to continue to play the energy names, they are bullish. There's no denying that. It's going over to staples. Not much to say over here. It's not leading the market higher, so it's up, but the market's not pressing a new all-time high here. Not overly concerned. It's going over to this XLY. I think this looks okay. Trying to defend the moving average stack for a higher low on Tuesday. Pretty much need to keep that pivot in play. Consolidation here, up and out looks good. Amazon pulling a lot of weight for this today. Even Tesla shaping up just a little bit. Let's go on over to materials. Lightest weight sector there is. Don't really, don't want to overanalyze it. It did get out of the range. We'll give it credit if it wants to go look below and fail, build some set of higher lows over here. We'll take it in stride, but for now, not going to make too much out of that. DRAM, got to do it right here, right now. DRAM must hold 55. If it doesn't, a little bit disappointing. In the after hours, it is slightly higher, 96.94 by 57s. So far pushing in the upward direction there. That is good. Needs to hold this as a higher low. That is this kind of must turn into the pivot. If we fail it, then you are back underneath the breakout point, and I think fizzling at that point. So DRAM looking good for now. That is a bit more risk on if this thing wants to structure out as an inverted head and shoulders. I personally am using this as the breakout point. So 55 is just a must hold. How many times did I say that one? SMH, not as good as the DRAM, just in the sense that DRAM is pulling back into a key level. That would be like the equivalent of doing this and holding, but not as good over here on SMH. We've talked about in the intro how some of the high beta stuff is not really doing so hot. Your poster child, NVIDIA, really smacked around today. Same thing with AVGO. Broadcom, two sigma moved to the downside. I think, worth a little bit of maybe bottom fishing there near the daily 200. However, heavyweight components for this proxy, right? This doesn't look great. It is slightly higher in the after hours. You could see 567s over here. 567s is going to put us where? Right around in here, midpoint of the bar. Is this going to be a higher low? It's certainly possible. It's not really near key structure, though. I do like, call me crazy, I do like the DRAM names a little bit better trying to hold that key structure. One of my favorites is MU. As I mentioned earlier, I even tried that long today. Had to push it back for, made a couple bucks into the close, but not holding that thing flat overnight. Looks like hindsight will prove me wrong, but hey. SMH, can it shape up? Can it do something through this gap above? If it does close the gap, do we just get swatted off the daily 50? That would be the next concern out of this name for a bit of a rounded top in here. that would be problematic, and the loss of 578.25 would be where I would throw in the towel and say, okay, that's not it, right? We can do this, we can close the gap and we can pull back, but you need to set a higher low over the 2-day high, so it's 578.25, and then look like that if it's going to be compelling. If you start losing this where I'm drawing this dotted line, that is good night, Irene. Nice knowing you. There's your little micro head and shoulders, and kiss it goodbye underneath this level. Maybe we round trip it all the way back down to the Leo liquidation lows. Don't want to be a mega bear on semiconductors. I'm just saying the chart does not look great here. It's getting a little bit of a gift overnight. We'll see if the buyers can do something with it. XLK, kind of similar to that SMH. The only difference is that you have a better move higher here. We are coming from the highest high. 50 SMA, 20 SMA, nice pivots down below. Need to hold that low, right? Pretty straightforward at this point. There's your follow through day low. You could maybe nick it once. And when I say nick it, just like something like that. Little Brigade bolt back over, so look below and fail. Brigade bolt it back in range and then back to the top. That would keep things alive. Again, your threat just becomes this. Don't want to be a pessimist. I would prefer to stay an optimist. Here, close the gap, higher low, and you're chunking it up and out. But we'll take it one day at a time. For now, I think this is in play for remaining bullish, at least into the end of the week, on support over the 20 and the 50 SMA. Nice response to defend that wick into the close. Next up, XLI, a little bit of a steeper pullback over here. This thing's been kind of grinding, going nowhere fast over the last little bit. The only reason it was holding up well was because of the Raytheon, your RTX. Oh, geez, Rackspace. Good thing I typed the ticker wrong. My goodness, I was like, that's not what Raytheon should look like. RXT? No, that is Rackspace. RTX, my goodness, getting the letters backwards. This was looking okay in this flag up here. LMT, Lockheed Martin, right? Nice push up here. I don't know what L3 Harris is looking like these days. LHX, is that it? L3 Harris Technologies. Yeah, not so good. Northrop Grumman, NOC. Northrop looking okay. Boeing, honestly, had looked pretty good back over here. These things are falling apart a little bit. But aside from that, your Caterpillar, yikes, ugly, disgusting, gross. How's that for an earnings failure? Closes the gap, tries to get some traction, and fails. These are not the look. You break the 50 SMA, you reject the 50 SMA like that. You really don't want to be overly aggressive on stuff that's losing the 50 SMA, setting lower highs. I don't know. It's just not really. Cat didn't do it. John Deere didn't really do it, losing the 50-day in here. What other industrial names? GE kind of failing through the stack. And what about Honeywell? Kind of looking pretty gnarly over here in Honeywell. So don't love those guys. But XLI, thankfully, is only about 8% of the market, and the XLK is about 30 whatever percent. XLC, this chart looks good, holding the stack in here. We're going to continue to need Google to at least stay put, if not try to break the double bottom neckline. Mag 7 ETF looks great as a flag through here. I really like that. Potentially looking for a nice push off of this to ultimately be setting the higher low. You could come in here, consolidate up and out, and I would start looking for continuation basically out of the Mag 7s. This will act as an anchor to remain bullish over on the S&P 500, even the NASDAQ a little bit. Let's jump on into XLF. A little bit of pain over here. The robo bid is over on some names. You go and look at a JPM, for example, starting to get down into the 20-day moving average. You look at a GS, you're like, okay, that's not great. Breaking away from the moving average stack here, lower highs, look, gotta hold 1,000. How about your Morgan Stanley? Not so great. Never really broke out of the low cheat, failed in here a couple times, losing the moving average stack. Bank of America starting to lose a little bit of the robo bid into the daily 20. How about something like a Citi? Okay, not a good look there. Look at that. Excuse me, your KRE, regional banks, right? Really big slap on the wrist here. And where does this come from? Well, probably the fact that Besant is trying to juice the rates down a little bit there artificially with the extra support for the long end. Let's go on over the IGV names. This stuff looks good. I really like what's happening here in IGV. I am still a believer in this hardware into software narrative. I think that is the AI trade development, and software. You're going to use software to basically address healthcare. So that checks out as being a part of the healthcare trade. They're using whatever software it will be. I mean, the guys at Eli Lilly, I'm not even going to pretend like I know what they got going on over there, but they must have their own AI department trying to figure out how to ultimately extract max value. Maybe they're partnering with someone like a Tempest AI, right, to extract max value from all the data that they have, basically. Anyways, IGV looks pretty darn good here. And I think that this is the potential rotation back to the highs. If this is going to close the gap, I would still advocate for a daily high or low after repairing structure and holding the 100 level. This looks pretty good. Some top components that come to mind: Palantir, is just absolutely phenomenal, holding in there at the daily 8. You go on over to an Oracle, not a bad look with the hammer off the daily 20 in here. I was not fond of the failed breakout, but this could get interesting over the highs in there. This is actually one of the trade ideas for the end of the video, so there's your little sneak peek. What other, I mean, just go down the lineup. You go on over the cybersecurity names, PanW off the daily 20 today, not too bad over here. You look at a ZS and you say, all right, this is just really acting well up here. I technically have a little bit of GWRE, a little bit. This is acting well out of the base through here. I mean, there's a number of these names. CRM had a day today, blasting right back up into the top end of the range. There's some stuff over here in software that I think you're going to start seeing new leaders emerge, hopefully, from this stuff, which will carry the market higher, right? So your new AI leaders in software, utilities, a little bit of a lower high happening over here. Not terrible. And then real estate, just, with rates. Honestly, I continue to remain just impressed with how real estate has not wavered at all at a 4.7 10-year. So, whatever's going on over here, maybe it's just low inventory still, but this thing is hanging in there kind of like a champ on that real estate. Let's get into some sector ratios. Let's kind of speed this up through the back half of the video. Sorry, we don't want the A set yet. We want the entire ratio stack. If you're not familiar with ratios on Thinkorswim, check out the video tutorial in the top right-hand corner. This, not great, kind of hanging in there still. Not great, but not terrible. Has not made new lows. I like the XLY hook higher. Amazon and Tesla need to bring us home. XLV will give this thing a check mark just because it's XBI. It's the biotech drug manufacturers, that stuff that's dragging the market higher there, not necessarily your insurers. We look at the XLP, not terrible. It still gets a check mark over here. It's not risk off. And the same thing over here with your XLU, not really screaming any problems there. Let's go to the A set. This still checks out, excuse me, for a higher low. Speaking of healthcare, higher lows over the 50 SMAs. This is good. This is good, of course. RK, not good over here on the Russell stuff. Once again, sniffing out a little bit of the Besant BS. Let's go on over to the B set. And what do we have on the TLT, right? Gold, first of all, with rates doing what they did, absolutely ripping. You've got the TLT coming in a little bit here, ratio at least, and Bitcoin breaking in the upward direction, courtesy of Donald and the whole gang, Vlad, Brian, the Winklevoss guys. I mean, just everybody at the White House today pounding the table for those crypto and Genius Act developments. Looking at copper, a little bit of a stick over here in terms of a sharp stick in the eye rather than a stick in the upward direction. Bitcoin got the upward stick. Copper said no thanks. And this is mainly due to the tariffs. It's steel, though, that got hit the best. I believe it's STX. No, that's Seagate. SX steel. What is the steel ETF? I mean, we could look at Steel Dynamics. This thing got rinsed. You could look at a new, right? You could look at a CLF. You could look at even an FCX, kind of got a little bit of a smack intraday. It did bounce back, though. Those metal names. What's that steel? STX, isn't it? What it, I'll find it and I'll figure it out for next time. But anyways, your steel names on the metal tariffs with Canada and such, those things kind of took a deep dive today based on the news headline. So HG Copper pulling back with that, but rebounding a little bit. The argument here is that you're just going to need it for data centers, right? Moving forward from the B over to the dollar and rates. Dollar gets smoked as Besant says what he says. Rates come in, of course. Makes sense. Does it sustain is the big question. The FOMC meeting minutes didn't really tell us anything crazy today. Inverted ZT comes in, of course. Let's go on over to these rate hike expectations. This is going to be fun. Watch this. Ready? Anything jumping off the page over here? How about the ability for the market to say, I can smell what's going on. That's not right, right? And then you're getting increased odds of a secondary hike. Before Besant said anything, the market was just saying, okay, we could chill out here and not necessarily need that additional hike. Now the market's saying, something's not right there, and maybe we have to, make a stand against it. Let's move forward. Bond vigilantes, as they say. What's going on over here with Thursday, August 20th, upcoming Philly Fed jobless claims? Don't really care about that. FOMC meeting minutes didn't tell us anything we didn't already know. You could peek through the report. I did, and again, kind of a little bit boring there. The Family Feud just says, hey, some people see inflation as being persistent. Some people think that all the pass-through costs of tariffs have gone through. Things will improve from here. There's a little bit of tension there. Generally, people think if inflation moves higher, we'll broadly speaking have to respond to that. So that's your summary. That's your executive summary of the white paper there. Flash services and manufacturing PMIs on Friday is the big event. I just shouldn't even say big, quote, big event fundamentally into the end of the week. Earnings calendar's been pretty slow. Fabrinet got absolutely smoked. Not sure exactly what else has been really going on over here. Haven't really been paying attention to these earnings names. Keys from what was trying to hang in there to getting absolutely smoked today, to continue using that term, and bringing down AEHR with it. So that's it on the earnings calendar. Wouldn't pay too much mind to this. Maybe we'll hear from Walmart before the open tomorrow morning and see what they have to say about the state of the consumer. But going back on over to the platform and finishing up our supporting evidence, we've got the bond market saying, okay, interesting, but intervention, right, for the long end of the curve. That makes sense as to why that's doing that. We jump on over to the credit spreads and we say, all right, is this a lower high? And if it is, that's bullish for risk appetite. Can you please play catch up over here on your corporate grade versus the IEF? That would be interesting. Let's jump on into our junk bonds in isolation. Notice that these things are holding in there. This is not too bad on your HYG in isolation. We are not pressing into the lows. We actually rallied today. And again, sure, you could argue a little bit of intervention there, pushing rates around a little bit, but nonetheless, this is, as a risk proxy, kind of trying to act well, right? It's not doing the wrong thing by making a big new low. Let's go on over to total breadth and see what's going on over here. What I do want to point out is that the market is not really, just take a look at this, right? You just extend this off to the left. We're about the same new highs versus lows, at least on Tuesday's gap down, versus what was happening, right as the war peak trough, peak fear, I should say, was shaping up there towards like mid-March, right? The big difference is just look at the number of stocks that have improved over the daily 50 SMA. Look at the number of stocks that have improved, or the percentage of stocks that have improved over the daily 200 SMA. They're going to allow this pullback to be, at least for now, a little bit more resilient. I'd be concerned about a larger downdraft in the market, seeing new highs versus lows looking like this, if the 50 SMA chart was actively pressing underneath 50%. That just means, more than half of the stocks in the S&P 500 are under the 50-day moving average. Not good. You're not in an uptrend at that point, right? We're just not there yet. So you could see here, it can rapidly deteriorate. It could happen in the blink of an eye in just a couple of days, but we're just not there yet. It's something to watch for into the end of this week. RSP technically makes it intraday new all-time high today. Impressive from a breadth perspective, makes sense with rates going lower, but it's the heavyweight stuff that matters. Anyways, QQQE hanging out where it needs to, potential higher low over there. And that's going to do it for breadth. Let's quickly check in on our volatility. Lower on the VIX. BB width is still kind of in an okay spot, under 16. You're like, all right, something's going to give here. We're not there yet. Let's check in on our constituent volatility as well. Continuing to remain suppressed down here. That is great as we see maybe names like SanDisk start to build out a little bit of a base. STX, although it's failed its breakout, a little bit of a base firming up here. Let's get some volatility contraction. That way we can maybe see a little bit more of a constructive move higher. VVIX getting crushed today. Generally, as volatility comes out of the market, that is a bit more of a bullish indication. Your vol futures, we are coming into a VIX-piration, actually. That's today. So just use the next one down below. It's still extremely high, the front versus back month volatility. If we just jump over here, hello, here we go. Let's try VIX futures. Let's jump into the product depth. And again, ignoring this extreme, because you are going to get an expiration, so your Q contract's going out there. Looking at this to this, very good, and the curve is still in the proper orientation here, making sense. There's really no reason for it to not be. I would say, if anything, on the Tuesday gap down, if this thing totally inverted like that, all right, let's pay attention. But for now, volatility is pretty contained, even with that gap down. I think it really just goes back to the point, just to bring it full circle perhaps, on the hourly chart, just to say, on the gap down from Tuesday, sellers did not attack. Nobody got aggressive that morning and said, sell, 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 sell. It was like overnight explosion, and then that's it, right? And nobody really followed through in the regular hours. So that's what I got for you across the broad market analysis. Let's quickly run through the core list of companies, see what's going on over here. NVIDIA, let's go to this daily chart here. Not the look with the bearish engulfer ahead of earnings. The market is getting a little lift in the after hours. 219s brings us to like midpoint of range. I would be still interested in this, kind of reclaim there. There's your daily higher low against the 20, the gap close, the neckline of this as, call it a double bottom or whatever. That's interesting to me. You could even look into the gap, fail it, and then go here. If you're just sideways in the range, probably not all that interested in getting active on NVIDIA there. Next up, Apple. Defensive tech gets a bid today as the market kind of struggles. Makes sense. If the market's going to be strong tomorrow, it probably pulls back, right? So I'd be watching this 310 spot on Apple. One way to get involved here would be a look above and fail on prior day high. You could get shorts going into the 310 spot. I'd reevaluate at 310 and say, okay, do they then lift it off of that potential level? I don't know the answer to that question, but that, it'd be great if I did. But that would be the place to at least look for it over 310 in the daily 50. Next up, we've got Microsoft. Not the greatest close here, pushing it back down underneath the daily 8 into the settlement. If we take a look over here, you've got your declining 5-day moving average in yellow, 8 in cyan there. Stronger buyers should have probably left this thing over 484.65. Not thrilled about Microsoft. I think that this could easily use a little bit more downside, test the gap, and then we're higher. Much more similar to the way that Amazon did it, right? If you take a look over here, Amazon, this is still an hourly chart, many days of downside, 20 SMA, and then looked into the gap, failed, and popped back out of it, and closes really strong. I like what I'm seeing in Amazon. FYI, I do have a position here in Amazon via the levered ETF. So that's looking good. That's feeling good. And, honestly, Microsoft could play ball the same exact way if it wants to come into the gap, right? If it wants to do something like that and wash out a little bit more and then give a nice little 20 SMA test and hold. Let's go on over to this Googler and let's just see kind of the train wreck that is Google. I don't like this chart just because it's going nowhere fast. Let me maybe reframe that. What I do start to like about it a little bit is that there's going to at least be some kind of trade here over this 347.25 into the 50 SMA because of the way that the moving averages are now, in there rather than just being arbitrarily through here. If I go to this hourly chart, you can kind of see back over here coming off the lows, it's like, no, I don't want to long into the 20, the 5, the 8, the 50. Now it's more like, okay, they're all right here. If it's going to break out, you're clearing the stack. Right? It's not like you're longing into it like you are here as like a buffoon on that upper wick. It's more like, okay, if I can reclaim that, at least there's some room to run here between the moving averages, right? And not that moving averages are anything special, but at least your references are now going to be underneath you when and if there's a potential structural break over that 347.25. Moving along, Broadcom over here. Broadcom, can we get something going? Another name that I have a position in now. Off the 2 sigma, move to the downside. I mean, the Marvel headline kind of crushes this a little bit underneath the 200 SMA, but notice how we just kind of wicked off of the overnight low. If I just go back down to this hourly chart, you could see it here. We slammed into the overnight low and then reclaimed VWAP and kind of hung out sideways. So, and even in the after hours, you're a little bit higher there, 366.65s. Is that going to be enough to kind of push us back up and over the VWAP? And even if it's just for a retest of this gap overhead, that's kind of an interesting little look here on this Broadcom. So I would not get short in the hole. This is the opposite of sentiment gets everybody all bared up down here. I mean, what a mistake that would be, in my opinion. I'm expressing that opinion by being long, but what a mistake to get short down here, smack on the lows. That just doesn't seem like the right idea. If you do want to short this thing, if you want to say, this guy's an idiot for trying to buy Broadcom, the news is so bad, fine, but at least tell me you're doing it there on a retest lower high of the daily 50 and the gap fill reversal. So that's Broadcom. I do have a little bit of a bullish bias here, a little too far, too fast. Show me the snapback. Let's see what we can get done over here at 381s. Next up, Metaverse. Metaverse is kind of like Broadcom. I don't know about being short in the hole down here, but on a 2-day bounce, yeah, sign me up for shorts right against that little gap down there. That's 564.85 to about 561. A little bit of a rally over today's high tomorrow. Show me a little smackdown off that level. Sure. So I'll be looking for that short into the end of the week. It could be Thursday. It could be a Friday situation, but that's Meta. Let's move on over to this MU. MU had it long here, and I will continue to probably try it long again tomorrow if it wants to act well. If this thing wants to put in a little look below and fail, high or low against today's low tomorrow, stay over the 8 EMA, or heck, it could even just be a break of a prior bar high, close this gap above. MU to me, at least finally, and I've been chatting with the guys about this in the group, guys and girls, just so much about this was such a train wreck of price action over here. I know there was a lot of money to be made, swings up, down, hold it overnight, you kind of nail a low, you go higher, you whatever, this, that, the other. This is finally the first spot from a technical analysis 101 book. Maybe, send me back to the 1990s and I'm not living in the new age, but this is finally the first spot pulling back from a higher high, because highs, lower highs, lower highs, lower highs. This is finally a higher high, undeniably, over the 50. First pullback, is this your higher low, right? Inverted head and shoulders and whatnot, neckline retest. Yeah, that makes a little bit more sense to me than trying to jam it inside this. So, maybe this is just, as the kids would say, I'll, call myself old for old school technical analysis, but maybe this is just, as they would say, cope. Maybe I am coping with just not trading MU through here. I don't know. But 929, just to give you the number. There it is. Tesla. We've got ourselves this little up bar. Tesla, can we go tag the 50 to do something inside this earnings gap? I thought today was a really nice day. If we look at the hourly chart, Nice little flag out in there and trying to go higher. I think Tesla could either get a gap up tomorrow and follow through, or if we open in range, I would be very open-minded to a day 2 follow through after a higher low up and into the earnings gap. So 351 is the watch on Tessie into the end of the week. Let's see if we can't make something happen here over the earnings high again and supporting off of the 8. Moving forward to JP Morgan, which we touched on a little bit already. Higher low off the 20 SMA maybe. Just kind of a not really something I want to trade, but just monitor for the XLF. You're coming into an equal low. So does this slow down for the XLF? Possibly. And as we know, the XLF is the second heaviest weight sector by market cap. So if this thing slows down, you're just going to see the weight picked back up where, your semis need to pick it up, your DRAM needs to pick it up, your communications, Mag 7s, like everything just needs to kind of pick it up to keep the churn going and prevent a larger downside move. AMD, as mentioned in the intro, looks absolutely god-awful. A lot of other stuff kind of put on a little show today. Or at least I shouldn't say put on a show, but MU with that lower wick, right? And we'll see some things here through the core, the scan ideas. This just closed abysmally. I mean, as did Intel, right? Both of these things closed absolutely terribly. But let's go back to AMD to start. Why is this so bad? I mean, talk about a rounded top, talk about a sustained period of lower highs, talk about consistent rejections of 507 overhead supply from back over here, talk about lack of day 2 follow through on Monday, higher low over the 50 and go. Now we're cooking with fire. I mean, just completely wrecked. Big unfilled gap above, back inside this chop and slop. I mean, instead of holding this as, is that your higher low? Now you're at an equal low? Like, what are we doing, AMD, back down over here? I guess Elon really did put the nail in the coffin when he said NVIDIA only, right? So AMD is not looking so hot. And, dare I say, head and shoulders here. We know how head and shoulders work. They do this and you say, oops, and we're higher. But just in the immediate term, this is an ugly, ugly chart. Ugly chart. Next up, Intel. Very similar in the sense that, maybe you got a better shot at a higher low, but you're underneath this pivot low. That's already happening underneath 95. Instead of going inside inverted hammer and then look below and fail for a support point over 100, which is, by the way, the key weekly level from back over here, you just completely lost it and unraveled. So don't really like what's going on in this Intel. To the downside. I get it. AMD and Intel both bouncing a little bit in the after hours as well. Don't want to be too bearish. And please don't get me wrong. I'm not advocating for Intel, new money short right here, smack on the lows. I'm just saying as a long contender, as insane as it sounds, this MU kind of looks a lot better as a higher low over the moving average stack, or at least close enough to a 50, where over it, now you're cooking with gas over here on this Intel. Not short in the lows, but sure as heck doesn't look like a great long. Same thing AMD. I don't know about getting short in the hole at these lows, but it does not look like a good long down here. So that's what I got for you through the core list of companies. Let's move forward into a couple of these ideas. MDB is the first up on the chopping block. Just a simple hammer candle at the 8, look below and fail previous day's low. Has a terrible history of price movement back here. This has been a big frustrator, at least in some of the trading I've done previously. And over the hammer high, it's interesting. It's certainly a daily high or low. Relative strength through here. Does it work? We'll find out. At least you have tight risk using today's daily bar low as a potential just clear line in the sand as the higher low pullback. That's MDB. Next up, RBRK, Rubric. Rubric for the cybersecurity theme, right? See a similar theme here? I don't know. Looks to me like a hammer candle off of the daily 8. Look below and fail the previous day's low. Leading group up through here. Nice breakout. Didn't even need to come all the way back into the left side peak. Be mindful of your earnings over here, but over today's high tomorrow, does it go up and out for a continuation play? As a little flag in the upward direction, certainly possible. The alternative way to buy this is wait for a deeper pull, get it here, and then you might not be able to get cushion ahead of earnings on that move, but that would also be available. And then we have something like an SMCI, everything about smuggling my chips in, all the jokes down below, let them fly. Here's your saucer bottom. There's your earnings gap and go. Here's your pullback daily 8 EMA. There is your hammer candle. Over the hammer high is also the HVC from earnings at 37.65. Over that level, see if we can't rock and roll into the high of that bar over here. SMCI is a big watch there. Just the chart's pretty. Look at the low volume pullback. I mean, come on. As much of a crapco or as much as you might think it's fraud, even do something that looks like that. I mean, I can't make this stuff up. The references are just all over the place in terms of the price structure on SMCI. So very well-defined tight risk trades if it wants to play nice. And by playing nice, it's either look below and fail today's low for longs or just over prior day high for longs with tight risk. Stop and stop, right? So SMCI. Then we go LUNR, LUNR, Intuitive Machines, right? Again, notice a theme here. Hammer, daily 8 EMA, 50 SMA. Over the high would be the 200 SMA. I don't like this one as much, and I think that's not as much of a shocker, right? Christmas tree, the move over here, round out the base, and you're still, early stage recovery. I'm not going to sit here and say that this thing's going to the moon, but at least it's a tight risk. I shouldn't even say it's not a quality, this does not fit the criteria of an A+ setup. I just think that you get some tight price action over here that you can work with if you're really trying to get something on in this lunar space. Right, so I like the hammer off the moving average, but it's probably not a top pick. ORCL, which we talked about a little bit already, hammering off of the daily 20, a break over today's high. Tomorrow is going to be a reclaim of the daily 50. It's over 147.35. And then last but not least, Dave. Dave is a short. I was just so shocked to look back at the end of the day. I was looking at it earlier on. I was like, okay, it's on the radar. You could see the alerts up there, but it literally made it right there. Look at this 5-minute chart. Look at this 5-minute chart. Ramp and puke. Let's see if it could do it again. Dave, buy now, pay, as Balboni would say, never. Go ahead and ramp it right back into the level, look above and fail, and sayonara. That's looking like a short to me on the retest of this double top neckline break. Fail the 50, first test underneath, try it short, bear flag breakdown, however you want to play it. Dave is offering some tight risk there on the short side up against that 365. That's going to do it for today's episode and installation of the pre-market prep. Thanks for pre-market prep. My goodness, this is what happens, I guess, when it's 9:30. The midweek market update. There we go. But you could join us for the pre-market prep tomorrow morning at 8 a.m. Eastern time. We're live every morning at bright and early, building a game plan for the day ahead. Join us here on the channel, free and open to the public as always. But if you enjoyed tonight's video of the midweek market update, let me get it right that time. Let me know down below in the comments section or by giving the video a very simple thumbs up. As always, we'll see you tomorrow morning. Keep it green for the rest of the trading week, and I'll catch you in the next one.